Good morning and good afternoon, everyone. Thank you for joining the Customizing the Digital Investor Experience webinar hosted by Aite and Refinitiv. We're very pleased to have you on, and we've got a very exciting agenda to go through with you. I'm just going to go through a couple of housekeeping rules, which are very boring, but we need to do, and then we'll go into the introductions, and then we'll jump straight into the agenda. So just to be clear, from a housekeeping perspective, the webcast will be recorded, and the resources of recording will be emailed to all registrants within a week. If you do have any questions, please submit them via the Q&A panel. There is a Q&A button at the bottom of your interface, which should then bring up a pop-up, and then you can enter a question. And then we'll endeavor to answer those questions as and when we go through the presentation. And please do submit questions. We'd love this to be as interactive as we can. In terms of technical tips, you can see on the screen, make sure the media player on the screen is sound enabled. There is no dial-in, so the webcast audio should be streamed through your computer. And yeah, if you do see any freezing on the browser where your slides aren't moving, please just refresh it. Okay, so moving forwards, let's just do a quick introduction. I'll introduce myself first. So my name's Christopher Spark, and I'm now globally responsible for our digital and front office solutions in wealth management for Refinitiv globally. I report into the Managing Director of Wealth Management, which is Joe Marak, and delighted to be sharing with you both some of our thoughts as a panelist today and also emceeing this webinar with Aite. So I'll hand over to Aite now. Maybe you guys can introduce yourselves, and then we can jump into the agenda.
Sure. Hello, everyone. My name is Alois Pirker. I'm heading up the wealth management practice at Aite Group. I've been with Aite for 13 years. I was before that with UBS in Switzerland and in London for a number of years. In my research, I focus on many topics, ranging from general trends in the wealth management industry, to financial planning, to CRM, to managed accounts, where I actually was active at UBS as well. And as of late, and for the last couple of years, on digitalization, which has been a topic obviously that has kept the industry quite busy. With that, over to Dennis.
Sure. Thank you, Alois. My name is Dennis Gallant. I'm a senior analyst with Aite Group. I have over 20 years experience covering financial advisor trends, studying that marketplace, looking at advice delivery, as well as investment product distribution. By background, I started off in the mutual fund distribution side, targeting registered investment advisors, had a stint at Cerulli Associates covering research in this market, and spent nearly 12 years with my own firm. So looking forward to having our discussion today.
Excellent. Thank you both. So let's jump into the agenda. What we're going to try to discuss is four main areas. Really, the digital transformation, data as a differentiator, the promise of AI, and the right content at the right place at the right time. The one thing we really will try to do as well is, whilst technology and data plays a big part in everything that we're going to be talking about, we're really going to try and focus on some of the outcomes and ultimate deliverables that make and support wealth management as a business. So sometimes the discussion around data and technology stays at the technology level, and we don't always move into, well, how does that actually help me run my wealth business? So without any further ado, let's start with digital transformation. So, again, looking at the slide here, really what we're saying is digital is considered firm-wide and strategic, going across the financial industry. So maybe let's start here. Dennis or Alois, why don't you start off by just giving an overview around what you mean when you say firm-wide and strategic?
All right. Thanks, Christopher. This is Dennis, and I can take this. When we use the word digital advice or digital transformation, right, it's a pretty broadly used term in the marketplace. And if you go back enough years, for many, going digital meant adding a robo-advice or adding access to an electronic statement for the clients. And then there was a lot of firms saying, well, we need to add the same capability in certain services. So there was a lot of Me Too attitudes out there. But a lot of these initial efforts were very, very siloed, very disjointed. Even within the wealth management marketplace, you may have some components of the offering on the advisory platform, maybe digital, but other areas when the business weren't at all. And so there was just a very inconsistent way of looking at the marketplace. It wasn't really client-driven as you initially think. But I do see that the marketplace has changed, especially over the last 12 to 18 months. Firms have sort of hit the reset button and taken a step back to reevaluate their digital strategy. And the focus really now is on the client and advisor experience, and not just within the wealth management, but across the entire organization, across various business lines. Now, in order to do that, it does require some change, and a lot of that starts with the culture and the organizational changes. Many of these firms, centralized this effort, created sort of a digital czar and teams that work across the various business lines and silos to really, develop a consistent strategy that has the same look and feel from the client, no matter where they enter or access a company, whether they're coming in through the banking side or the wealth management. They want that experience to have some continuity and consistency. That also means pushing that through a variety of delivery formats. So, and be able to consume it through a laptop, through pads, through their mobile phone.
Sorry, go on, Dennis.
We can advance it. Yeah, so if we jump to the next slide, what's interesting is we just pulled a survey out from the marketplace. We went out and spoke with 400 advisors and asked them about all aspects of their business. And one of the interesting aspects in this study is we asked them, how far along they were in developing and implementing a digital advice platform or capability. And if you look at the data here, you have just under half are at some stage in developing or have implemented a digital advice offering. And you can break that down that you have at least a quarter of the survey respondents saying, well, look, we're researching that and reevaluating what is it that we want to do in this space. And I think that's a great sign that there's not a rush to sort of just add things because the competitor down the street is doing it. And then you have another 11% that are in the process of either evaluating a vendor or selecting a vendor. There are a lot of different robo solutions out there that have now pivoted to the advisor marketplace, services in the marketplace. United Capital being one of them is now a platform that you see targeting various advisors, and there's certainly a lot going on with their acquisition with Goldman's acquisition of their platform. And we have around 12% of the advisors out there that have gone live with their solutions and pushed it in the marketplace. I think another significant piece on this chart too is looking at the fact that you still have 42% that just aren't interested. And I do think that, that much of the change to digital is not only tied to existing advisors, but I think it'll happen with the next generation coming into the marketplace. There are many advisors, and maybe they're 5 years away from retirement, or for whatever reason, they're not looking to make that change. And I think it's important for firms to recognize who they can drive change with and who aren't going to sort of move into the digital spectrum. It's not like it's happening overnight, so those that choose not to do it doesn't mean it ended their business, but it certainly will be a difficult value proposition to maintain in the next 5 to 10 years.
Yeah, I mean, I understand and agree. I mean, I think one of the things that we would observe is, digital, certainly from the Refinitiv angle, digital has, I guess, a different level of understanding within the different firms. What we would really be seeing is, most wealth advisors today either have a desire to get better investment insight to help with the allocation or selection decisions of portfolio construction, or they have a desire to get more client-centric as a result of, moving from what is a more brokerage model into a more goals planning, financial planning, retirement-based sort of wealth management. And in doing that, you ultimately need to have a much richer set of information on your client. And that's how we kind of see the interest in advice changing. It's not just about how you actually give digital advice. It's more about how do you utilize digital capabilities to improve ultimately what you would call client engagement. So, let's move to, sorry, go on.
Yeah. So no problem. I was going to say, I think one of the things that you have to think of is that this is the advisor's perception of where they are in the process. It doesn't necessarily that they fully understand how digital can transform their business. So, and I think this next slide sort of represent that. So you can advance to the next slide and actually show both ends. So again, from our advisor survey, we're sort of looking at why are they doing it and for who, right? And it's not surprising if you look at the column to the left that they're focused on younger investors, right? The millennials, and they hear it in the media, and in fact, I think everyone's been conditioned. Well, if it's going to be digital, you're doing it for millennials. Certainly the second point on that chart is very relevant too. In fact, I think it's even more critical. The children of existing clients. I think it's absolutely crucial that advisors start to establish ties and rapport with the client's children. We've got the impending wealth transfer, and having those relationships will be important in order to retain those assets longer term. But I think when you look at this chart, and this goes back to some of your thoughts, I look at the what, right? So on the right side, we're asking, why are you doing this? What are the practice goals for putting it together? And somewhat of I look at it and I see a little bit different attitude. They say, well, we want to serve some of our existing clients more cost effectively. And I think given fee pressure and all the other aspects in the marketplace, advisors are looking for mechanisms to be more efficient. But is digital support, digital capabilities really relegated to servicing small clients? Does it apply to a broad array of clients? Is digital capabilities, is digital advice and capabilities able to service clients across wealth tiers and age brackets? And Christopher, I'd like to get your thoughts on your view of how applicable digital tools are to the advisors and clients.
Yeah, look, I think first and foremost, you strike a really important point, which is sometimes we think about digital and mobile means as services that should be supporting millennials. And certainly at Refinitiv, our view is that digital is relevant for all end consumers. And the real reason being is whether those end clients are, taking control of their investments themselves, or whether they are going through an advisory model. Ultimately, both those channels require, improved engagement and improved service. And digital helps across the board. So I'll just kind of give a few examples as how we see it. But firstly, just to be clear, we see that advisors that serve any type of customer can benefit from digital means. It really is not the case that the millennial benefits from digital and the non-millennial does not. And so when you think about that, just let's talk about some of the challenges advisors have today. Many of them today have an information tool, they have a CRM, they have some form of connection to their back office platform, they might have a robo tool, they might have a financial planning tool, and actually they usually are interfacing between 6 to 9 different applications. So, when we think about that, one of the first challenges they have is just simply workflow of actually doing their job because they're having to interface with multiple different applications. So a digital means to connect all of that data and make it available in an integrated workflow is just going to improve productivity to start with. And then when we get to client centricity, if you think about client centricity, the first thing is, why client centricity now? And again, that really comes back to what is moving in some of the ways that wealth firms are trying to service clients outside of a brokerage model, and as we've said, into a financial planning and into a goals-based model. And as soon as you start to move down that, you find very quickly you need to learn and understand your client much better. You need much more information on your client, their preferences, their risk tolerance, their interests, their goals, their plans for their children. And all of that has to surface up into something that allows you to then engage with them in the different ways that they have with respect to their goals. And all of that comes into an information paradigm where ultimately when you speak to your client, you want to surface all of that information that helps you achieve their goals. And then likewise, if you think about investment advice, the challenge that nearly all of the advisors surface today is there's a wealth of information out there. It's very difficult to get the really valuable stuff pertinent to my specific clients on a specific day. And we actually had a survey that suggested that some of the advisors' kind of almost biggest fear is if a client was to ring unexpectedly and they were just to start asking questions about what was happening on their portfolio that day. Because it's how do I get all of that information that's relevant to my client's portfolio, that's relevant to the investment profile? How do I surface that? How do I talk about the most interesting research, the biggest drivers of performance, the areas of risk? How do I deal with the fact that, I don't know, let's just suggest that there's trade tariff conversations between Trump and Germany that means that the German automobile industry is, potentially at risk in the US. How exposed am I to that? How's my portfolio going to do? Should I be concerned? all of those things lead to, again, digital means of combining information from an investment perspective that's relevant to the client, so that the advisor can literally surface that and proactively engage and say either, you've got low allocation of risk here, you're absolutely fine, we're making some changes here, there's some really interesting news stories that are coming out, there's actually been some in-house research that we've released recently, all informing the advisor in an informed way central to their client. So, I mean, just to kind of say, almost taking a step back to your question, this is all about not kind of, is it relevant and to who? It's digital is relevant to everyone. And it's more about how do you utilize it to help the advisor have more client centricity, have more relevant investment insights, have more relevant planning with their clients. And in the same way, if you're working on, from a more self-directed approach, just surfacing that information and that service online in a way that's relevant to all practitioners, because there are many practitioners out there today also that are not millennials in any way, shape or form, that are taking control of their investments. So slightly long-winded answer, but I wanted to kind of give a kind of rich answer to your question.
No, and that makes perfect sense. And I mean, again, even if you look at the older clients of an advisor, many of them are retiring, they're relocating, they're connecting with new neighbors, 7 states away or on the other side of a country. And now the advisor's getting referrals from clients that they're geographically not located near, and they have to find a new means of communicating and servicing those clients. So digital, again, I think applies at both ends of the spectrum, and so I completely agree on that. And this move toward advice is really going to tax the advisor's capacity in both time and expertise, right? So I think the industry has to look at this much like they did the transition to fees, where there's going to be a lot of training and support required to get advisors into digital capabilities and to move towards advice and adopt these services, and that feeds right into getting clients acquainted with the capabilities as well.
So let's move to the question. So first question is a very simple one for our participants. How satisfied are you with your firm's digital strategy? So we'll just take a pause there. We'll give a minute and then we can look at the answers. But you've got the options there in front of you, so do select them and then hit the submit button down below. Just whilst we do this as well, I mean, one of the things that interests me is, we're asking the participants how they're finding their digital strategy. I think that, I've worked at Refinitiv and Thomson Reuters for 13 years, and we've definitely seen an evolution in our digital strategy. It certainly was something that, a few years back, may have been something that was sort of innovative on the side, but we certainly see now that digital is front and central of everything that we do. And the way that it's got to be premised on business outcomes that can relate to service, performance, etc. But it's across the board with us now. Let's move to the answers. Sorry, carry on.
No, I'm good.
Okay, so look, I guess probably not a huge surprise here. There's very satisfied is minimal, satisfied. The majority is not satisfied. So, look, I suspect that we shouldn't be too surprised at that, but at the same time, I think it clearly shows that there's more to do. So let's move to our next area. So data is a differentiator. So again, look, I'll put it over to you guys first. Facilitating client engagement and planning. Let's talk about that. How does digital help facilitate client engagement and planning? How do you see this?
That's great. This is Alois here. I'll take it from on this one. And I'm actually it's quite interesting to see the results from the prior poll, because I believe 38% said they're actually satisfied. So that's a higher number than I would have expected, because I do believe that there's a lot of work that needs to be done in the industry. And I think when we look back to the slides that Dennis put on about the advisor's view of the of digital, it becomes clear that, and Christopher, your comments that you made before, it becomes clear that the enterprise, the company, really needs to redesign the processes and takes matters into their hands in order to show what does the new advice model look like. And this is at the core of what this slide tries to show. When we take the financial planning process, and we recast it in a hybrid fashion, meaning the client engagement is injected at all of the stages of the financial planning process. Then we have a radically different process that we look at, and the client actually being able to direct and add value to it and receive value as the process evolves. It starts off with scenario-based outcomes, where again a client should be able to add goals, should be able to be very, very proactive in terms of driving and adjusting the setup as the plan is being developed. See progress to goals, possibly do some simulations even themselves. Then it moves on to the real-time display of the financial plan. They should have access to it. It shouldn't be something that is a thick book that sits on the shelf, but rather that is a living document and the client can go back to. And in order to achieve that, we really need to link our accounts and internally as well as externally into the plan, and make what often is referred to sort of a goals-based wealth management setup out of it. That the goals drive the engagement and the back office accounts and data is being mapped into it, so that the client has a clear view on where they stand, where they need to go, what goals they need to adjust. And obviously, it's an ongoing process. It's not a one-and-done type of exercise. It is something that is becoming the governing framework for the relationship of the client with the advisor and or the firm. If we move to the next slide, the problem that we are facing with that is that the data is really all sitting in the back office. So we have clearing and custody environments, we have accounting systems, we have record-keeping environments, we have all sort of back offices, trust being one of them, and that's just investment products. Obviously, we have many other products that a client might have with the firm, depending on if it's a bank or an insurance carrier or whatever the entity is. So how do we make sense of that? How can we really roll that up into a meaningful experience for the client? If you go to the next slide, the needs are not just on the financial planning side. It really is ranging from digital self-service to risk analytics to we have this term wellness now that is the all-encompassing element of what the financial picture of a person is concerned. And so in the health and insurance side is obviously part of that as well. And then we have content and education that goes into it as well. So how can we drive that if all of our data is sitting segregated in the back office? So we need, if you go to the next slide, we need this data exchange. We need some financial data coming from the back office to the front, and we need some client data going to the back, obviously. And but very importantly, we need on the front end, we need to run a horizontal process. We need to run a client-centric process that is, again, process-driven, but also data-driven. And that's where the middle layer comes in, this data layer. We can only do that if we start inserting a level of a semantic level of representation of the client in terms of data, and then drive the enterprise from that data level. Obviously, data is far and comes from different areas. It comes from CRM, comes from account aggregation, it comes from social. It could also come from digital engagement from the front end, obviously listening to what the client is telling us when navigating the website of the bank or of the wealth management firm. So all of that obviously is part of it, not just back office information. And from there we can direct our business with the client. Christopher, maybe back over to you. I mean, Refinitiv obviously is a big data company. How do you see that? How do you position yourself in that context?
Yeah, I mean, look, so firstly, what's really interesting, and obviously we've spoken prior to this, but genuinely what's really interesting is kind of what you're seeing and what we're doing are really closely connected, and you know, it's great to see that. You know, I think that what I just want to kind of almost start off with is, you know, rather than going from the bottom to the top, let's just talk about the top. You know, we're trying to talk about how do we enable the advisor to engage better with their clients. And so what we're thinking about is how do we build an application to start with that surfaces and pushes all the information that an advisor needs to engage their clients. Which financial plans are outside of their tolerance? Which customers have got birthdays coming up? Which customers have deposited cash? Which customers have gone out of their risk profile and need rebalancing? Who have I got meetings with this week? When are the next reports? All of those things, all of that needs to be surfaced into a dashboard so that ultimately an advisor can have a very clear schedule of what I guess the industry refers to as the next best action, which is pushing all of the right prioritized information on the clients, as we've just said, financial plans, investment reviews, etc., into some form of interface that allows them to then prioritize that. And then within that, you also want to be able to surface insight on market themes that are impacting that today. Those customers which are having a worse performance than the benchmark as a result of market volatility. Those customers where there's some rebalancing should be made available. And really importantly is in the advisor, when that information is surfaced to them, they have the ability to take action. Now, those are some of the outcomes that we're looking to solve for. And the way that we then try to do that is effectively by creating a data layer, as you can see. So what we are essentially saying is, in order to do that outcome, the level of integration is not just at an application level, it has to be done at a data level. If we're talking about an advisor's client, the information in the CRM and the different fields that relate to that client, the information in the back office, the information in the financial plan, all needs to be the same. So that you normalize that and surface it in a way that then allows the analytic, the prioritization, the taking action to happen. And so that can't happen if they all sit in their siloed data points, as you've just highlighted. You have to create a layer that then enables effectively information, analytics, and then applications to talk to that information layer. And this is probably the key deliverable we're working on at Refinitiv right now, is effectively to transform what is an information system on markets to effectively a combined information system on the client, and everything about the client in combination with market information is ultimately what we're solving for. And we believe that by doing that, the data, the experience is more consistent, but most importantly, the engagement of the advisor, albeit through the self-directed model, gets much better. And it creates all of those things that your client wants, which is they feel like they've got a more bespoke service. There's a more relevant engagement with them because there's a much better understanding of their goals. And all of that's facilitated by essentially the engine behind client centricity. So totally agree. This is exactly what we're working on right now. I think we should probably move to a question. So
that is
again, it's a pretty easy one, but again, let's just see. So does your firm have a client data layer? Yes, no, partial, I don't know. And again, let's, once you've made your answer, submit the answer.
And maybe while we're waiting, I have a follow-up question to your slide, Christopher. Now, what do you see? You serve obviously many clients. Do you see them actively asking for the data layer, or is this something that as a vendor you have to explain to them? Are they mature enough to really understand what the data layer is?
Well, look, I think that the way that a wealth firm now is putting a lot of focus around technology and information technology and the overall data means that a number of firms are, certainly the larger institutions, are absolutely looking at a data layer. I think what your challenges are to an extent is kind of what is the capital expenditure needed to build one, and then also to make sure that it's less about necessarily the how on the data layer. It's being really crystal clear on the objectives that you're trying to achieve with the data layer. So I'd say that there's a mixed response. Obviously, customers are very aware. I would say all of them are aware that technology and data is a key part of their competitive edge. But I think it's also very much around what business outcomes you're looking to achieve. What is the metric of success by having a data layer? And I think those are some of the key areas that we're trying to work with clients on. Certainly my goal is not to tell a client you've got to build a data layer. My goal is to tell a client we can help you achieve some of your business outcomes, and then if the client is interested, we can start to work with them on the how. Let's have a look at the answer.
That makes sense.
So, wow, look at this. So we've got a very mixed response here. Yes, I guess from one perspective, we could say that 75% of our participants are not at a yes. But I think that this is, again, I'm not so surprised by the response here. Let's just see what you think. What do you think about these set of answers here?
We have a lot of conversations with our client firms around the data layer concept and so on. And typically, I think to your point, I think the data layer is something that is often, for the bigger firms, it has evolved over time. For the smaller firms, it is something that's hard to get to. And so I think I probably would have expected less on the yes side. So there's probably some ambitious folks here that see more positive the setups right now. I think there's a lot of work to do when we speak with firms, but we see elements of it. I think the partial is probably representative of where we see the industry sitting right now.
So there's a question that's come in, by the way, we should refer to it, from Warren. And the question is, when you refer to digital, which format is the most favored interface? Is it websites or an app or closed protected site or social media? So I mean, how do you respond to that? I mean, I've got views. What do you think?
For us, digital, when we look at digital, it obviously the name suggests it's a technical widget, right? A thing that goes on top of something. It's a veneer that is going on top of an existing business. When we look at what digital transformation really entails, it is a business model re-engineering requirement, re-segmentation requirement that is going deeper than where the word digital would actually suggest it would go. We see a lot of firms discussing, for example, how advisor compensation should change due to digitalization of the industry. So yes, we talk about in different stages. We talk about engagement that happens through digital means directly with the firm and bypassing the traditional advisor channel. And that can be obviously online, that can be through apps, that can be through any type. But I think the impact of that word digital is so much deeper than just putting this technical capability out there, and much more the evolution of the business itself.
All right. And this is Dennis. To add to that, it's going to have to address all those particular applications, right? There isn't just one favorite interface. Although I expect, as the millennials start to gain more momentum and gaining assets, I think social media is going to play a bigger role, not only for servicing clients, but I think from a prospecting standpoint as well, for business development.
Yeah, I mean, I think just the only thing I'd add is, from what I see as well, mobile is taking such a majority focus of people's time now. There are so many ways that you can actually engage on a mobile in a more efficient way. We've been looking at, across our risk business, a digital identification technology. And when you start to think about how that can speed up processes, moving from what is a manual authorization via paper to a mobile experience where an advisor can send a message to a client specifically about the risk or an action they want to take, and the advisor can, the end client can quickly verify their identity through their phone and make the decision there and then. There's a lot of things that actually can speed up and improve the efficiency of the engagement. So the only thing I'd add to what you guys have said is I do think that, mobile technology is a big area that we're focusing on across a number of the workflow pillars, because it really is becoming the preferred means to interact. And it's about the efficiency of how you transfer that information. So let's go to the next area. So the promise of AI. If I was to Google the promise of AI, I think we all know there'll be reams of research. So artificial intelligence beckons. Let's just think about, why don't you give us an overview firstly on what are the business outcomes you think AI can help with? And then maybe you can ask me what I think, but it'd be interesting to see. There's a lot of talk of AI. I'm not always convinced we do a good enough job about talking about the outcomes that they can provide, or that capability can provide to a wealth firm. So, what do you think?
Yes. Yeah, no, I can take that. I think it is one of those elements that is, as you say, really badly defined. It has such a broad catch term that has so many elements in it, from machine learning to cognitive science and deep learning, and you have again when we say AI, so it's almost like robo or wealth management. Also, we understand so many different versions of it than actually and have a hard time understanding what it can do, what it really is. And I think that's the first point here on the slide, is really, I think, the getting that map that allows you to get where you want to get to. And AI is not necessarily a goal; it's something that helps you to get to some goal, but you need to define what it is. And I think that goes back also to the data layer. When we look at how firms like the Amazons and Facebooks and so on are working with data versus how wealth management firms or financial institutions are working with it in terms of aggregating data, learning from it, and then being able to suggest to you things that are just the right things you want to, that a client wants to see at a given time. I think that's where those AI and analytics methods are really coming in. But again, I think for us, the technology itself is really meaningless unless we really define what is the business outcome that we're looking for. The second thing I think that firms are struggling with is the human resources around it. Of course, when you want to engage in AI and you want to do analytics, you need to have the right talent, data scientists. So you need to have folks that are really able to drive the capability in the end. And that's for some big firms, obviously, that is there and has been there. And it's just, we get now these data layers, we're getting a better setup for it. For other firms, it's a net new capability they need to, and a net new talent they need to bring in. And again, I think right now, given the fuzzy terminology, we're still very unaware what it actually is. If you go back to the price level, then that's perfect. Yeah, thank you. I think there's a couple of questions that the industry needs to address. What can it do? Obviously, I think the second question which is involved in it is that the various parties are asking, what are you doing with my data, right? And this is a question that not just consumers ask their firms, but it's also institutions are asking service providers, right? So there's a definition requirement in terms of where's the data stored and how what insight is created from it and what value is being created from it. The whole question around, for example, again, Facebook making money off advertisement or Google making money off advertisement with your data is obviously a question that are you okay with that, and or is it benefiting me as my business? So what is being done with that data? The build versus buy is a big question. We know that the mechanisms are not the tricky part. They're mostly open source. What really is the tricky part is the data. Again, it comes back to the prior point of organizing the data and making it accessible for analytics. And then again, defining the approach, the security use cases around it, the maintenance cycles around it, and then again, the big question is, what will regulations do in the overall picture? Clearly, we have many drivers, and many of them we've discussed already. That demand for innovation and being a lot more specific and customized to the client obviously requires those methods. So if you go to the next slide. When we look at this topic from the advisor side, advisors are confronted with a lot of technology already, and so they really what they are looking for is accessing technology from one location and then have real-time information and insights coming to that. If you look to the next slide, there's many tools that an advisor has access to, and they're not, with that financial planning slide I showed earlier, it's not just the advisor accessing the tools, but many of the tools are being made hybrid, so that there's user interfaces, client interfaces that are added to it and becoming a hybrid process, and not just an advice process out of it. And so sometimes it's hybrid, sometimes it's self-service, sometimes it's advised. What we need is an umbrella of data and insights that wraps around it, that takes in the data from the various applications, consolidates it, and makes insights and delivers it to the point where information is being consumed, either on a self-service channel or on an advisor channel. If you go to the next slide, we do believe that that the race is on for that position on the dashboard. It's not quite clear how firms will go about to implement this. We see some firms like in Morgan Stanley obviously building next best actions themselves, and they can. And when we've seen the comments from the CEO lately, they've put a lot of money into it. Obviously, not every firm can do that. So the question is, where do those capabilities come from? And again, there's a lot of emerging technology. How is that emerging technology being integrated into the overall picture? So data and APIs are really at the center of it, and we do believe there's collaboration and competition at the same time between providers here emerging that will serve the industry. Again, Christopher, back to you from maybe at the Refinitiv standpoint on this topic. And I know you're fond of the term AI, so maybe you give us a little bit of a sense for what your thinking is around it.
Yeah, sure. Actually, funnily enough, what we certainly try to do is to not use the term actually with our customers. But what we definitely look to do is utilize it to help with some of the solutions that we deliver. So if we start with our news, for example, right now we're launching an API that delivers news, but it's effectively got a machine learning capability in it that helps with things like sentiment, relevancy, the most read, and all of those things. But ultimately, you can utilize the API and say, is this an important story or not? And if it is important, how are those things being surfaced? And what is that sentiment score, etc. There's a lot of stuff we're doing really around increasing the metadata value utilizing AI. Certainly within our risk APIs as well, when we think about some of the things we do to support AML and screening, one of the services we've got is something called Media Check, which is really just looking to check for adverse media on any prospective customer or existing customer. And again, that utilizes effectively a machine learning engine to ensure that the sentiment or the scoring from that adverse media is relevant to that person. And again, that's kind of quite an important area because it really is digitizing some of the KYC and AML in a way that we think is probably more reliable than just a human approach. Other things we're looking to do as well, utilize kind of either machine learning and AI. There's a whole suite of tagging and intelligent tagging we put on our unstructured data, and it's really to then enable surfacing of the core value of unstructured data in an interface. So for example, if there's a transcript on a company's earnings, if there's a piece of research, usually they're tagged in quite a vanilla way, but you might want something that surfaces all information on a drug patent on asthma, for example, or on a particular person. And again, just being able to pull that information in a way that then utilizes a machine learning tagging engine to surface it is something which can make information much more discoverable. And again, all of that kind of comes back to, can that surface something in a way that's more intelligent for an advisor? And last but no means least, and I should add that we're at the early stages of this, but as we think about our data layer, obviously there's things that you can start to do with data when it's in a cloud, be it a private cloud or a public for that matter. And one of the things we're looking at is, if we are managing some data for customers and a specific client, then we can start to to provide some intelligence around that data. So just simply utilizing some learning that or AI that says, here's a suite of people and people profiles that are clients of yours, Mr. Customer, and then here's also a whole level of intelligence about products that are most relevant and when they should be surfaced. And again, we see this type of capability used in the retail space all the time. The firms like Amazon do that. But again, we're looking at it. It's obviously a sensitive area because obviously client data is the information of the clients. But being able to surface on this, even just on a per client basis and just effectively giving a set of intelligence back to a client on their customers is something that we think can be tremendously valuable. Again, when you're thinking through the lens of engagement and how you're surfacing, innovative or well-suitable products for customers and their risk profile. But just some examples of how we're looking to utilize it today.
That's fantastic. Maybe we ask the polling question next one, and then I'll ask you a follow-up question after that, if it's okay.
Yeah. So again, fairly open question, but how satisfied are you with your firm's use of technology and data to help generate insights for clients? And again, I think that this is, as we give people a minute to answer this, I think this is really the core point here as well, is really making sure that you're aligning business goals that you want to achieve through technology. And yes, we should see in a minute kind of how that scores.
Yeah. So my follow-up question to your comment before would be, so when you look at analytics and AI, so the way you describe it, what you guys are doing in that space, it really seems to surface in many different areas. So it's not something that is necessarily localized in certain parts of your technology architecture. It really spreads across it. Do you see that correctly?
Yes, I think that I say this in a almost just neutral way that one of the things that Refinitiv does is it manages an awful lot of data, and it does that for the majority of times with just information that we provide to customers. But we obviously have a pretty good understanding about what our customers are using this data for, and there's very many different varied ways that our customers utilize our data today. Some use it for AML and compliance, some use it for trading, some use it for investments, etc. So, we really, when you think about all of those different use cases, all we're trying to do is think about the processes and the use cases that our customers are utilizing our services for today. I'm just saying, is there a way that we can help? Is there a way that we can use AI to find, tools to improve trading times and trading volumes? Are there tools that we can use to help improve compliance and AML procedures? Is there ways that we can help wealth firms, match products to client suitability? Each of these things is a use case. And importantly, what we're not trying to do is almost, dare I say it, sell the concept of AI. We're not interested in that. In many ways, what we're interested in is saying, how can we provide our customers answers to the problems that they have? And we may choose to use AI as the technology to help achieve some of those outcomes. Let's go to the answer.
That's fantastic.
So interesting. So again, in many ways, we shouldn't be so surprised. Although maybe nearly 60% of our participants are saying not satisfied. So it probably says a lot for where we are. What are your thoughts on this?
I totally agree, and I think I would have expected a similar distribution on the data layer chart as well. So what it makes me think is that I do believe that organizing and managing data strategically is a precursor to getting better on analytics and insights generation. And so if you compare those two results and if you say there's a lot more client data layers already in existence, which would make me believe that we will soon see an uptick on the analytics side here as well. So it's a chicken and egg thing.
Excellent.
I think you really have to have the underpinnings first, right?
Exactly. Okay, so let's go to the next area. And we're now in the area of the right content, the right place, the right time. If ever there was a set of phrases that could be relevant to a whole load of areas in financial services. But be that as it may, let's just talk a little bit about the expanding role of wealth management. From many ways, one can ask, what is wealth management? And across the globe, there's everything from retail banking right the way through to private banking into independent financial advisors, etc. But why don't you just give an intro from your side as to what you think the impact and what you think the core drivers and the focus is around the expanding role of wealth management?
Sure. Hi, Christopher, it's Dennis. I can take this. So, if you think about the expanding role of wealth management, and this is especially true of in the U.S. market, the move towards fee-based pricing and advisory services really was the catalyst towards this move towards advice. Spending more time with your clients uncovers more needs and more capabilities. And you add the mix of technology that's being overlaid. So now through account aggregation, now you can start to look at the client's full balance sheet, looking at assets and liabilities. So you have advisors getting greater demand for services, They have the ability to actually manage and look across the various aspects of the client's financial well-being, and it moves beyond just investment management. Think about the challenges. A lot of markets are having an aging society, aging investors. To really deliver retirement income really requires a very holistic approach to financial planning, and many of those services, as I mentioned, get even further away from investment management. So you have topics that advisors being asked about on health care, elder care, Social Security, hospice care, as the market's getting older. But it also plays the same way with millennials, right? And many of those issues are related to cash flow and debt consolidation and general savings. So as you can look to the right of the slide, there's lots of different services and capabilities that the advisors have to address. They don't have to be an expert in every one of them, but they're definitely topics that they need to be able to speak to and address with clients and respond to. And this is where I think it's really important that, as we talked about with the Alice's last couple of slides, data is absolutely essential. You have to have that holistic view of the client. You have to look at their entire situation. You really have to draw on that information, and it has to be fairly accurate. But I think that the benefit here, and it's still early days, is really looking at the analytics, right? It's going to aid the deployment. It's the integration of this information into the workflow. It identifies, again, we talked about next best action. When a client's calling and talking about a particular topic in retirement income or elder care, what's the appropriate information that will help the advisor support and address those particular client needs to provide that right level of education at the moment they need it. The idea here is that the AI and data can really help expand the advisor's capacity and that time and expertise. It also enhances the client experience because there isn't a lag anymore. That clients can get answers fairly quickly through different methods within an organization. So if you want to just to the last note, because I know we're getting lower on time, just advance one more time.
Sure.
You've got I guess a good example is you've got lots of different areas and expertise that we need to address, right? Again, client could be talking about elder care. They'd be talking about alternative investment. One of the areas that we hear a lot of topic and conversation around is really on impact investing or ESG. And I know it's an area that Refinitiv has covered quite a bit. So provide some perspectives for us, Christopher, on where you're seeing this marketplace, where the needs are, and what Refinitiv is doing.
Yeah, no, we're really excited by this. I think that we have a whole suite of ESG metrics that we cover. We've got about 400 different indicators overall that support ESG metrics, everything from diversity to social factors to carbon emissions, all of those things. And when we think about how we look at ESG today, what we've got is essentially a database that has a whole suite of these metrics. But what we're doing is we're folding it into the various applications that can help a wealth manager do their job. So whether there's a portfolio performance report that may be generated that would start to categorize securities not by a standard classification but by an ESG classification or a rating, or whether there would be interest in looking at screening for securities or funds, for that matter, that score well on low carbon emissions or have a good policy around diversity, all of those different points. What we know is this all comes back to client engagement. So if your client is interested in making sure that they are in environmentally friendly securities or funds, which is, again, trending very highly, how do you ensure that you take those factors of your client's preference into your investment process? So there's a two-stage approach that we've really taken here. Number one is to invest quite heavily in supporting ultimately the data needed to provision ESG metrics. And then the second phase is to then build it into the workflow tools that we have around performance reporting or security screening or simply security overviews. And again, this is very important because, again, we see that it's such an interest now, particularly with clients looking to service, the preferences of their clients overall and their customers. We really put a big focus on this because we're seeing a big driver in it. And again, I'd say above everything else is this just is another way of making sure that you've got the services and tools that ultimately connect your engagement with your clients to their preferences.
Right. No, it's an important area, and it's an area of differentiation for advisors. It's an area where they can still add value from building and creating the allocation. But as you mentioned, it's very tailored. Interpreting what impact investing means to an investor is going to take a bit more time and effort. And there's lots of different layers, different rating services. So I think this is an area where providing a framework of information, not just for the advisor, but for the advisor to educate their end client, is really important.
Yeah, I agree. So
why don't we move?
Yeah, let's get to the
last question. We can go to the last question if you want.
Yeah, let's do it. So how important is impact investing to your clients? Again, just through the lens of what we just said with ESG, let's just test, what we think. So if you, again, select the area of the answer and hit submit, and then we can review in a second. Just as we wait as well, what I will say is, I think, there was a view historically that, impact investing and ESG was, regionally different. But actually having, now done this role globally, I can see that actually, whether it's at different speeds or not, we certainly see the all regions and all countries globally in wealth looking to at least factor this in. This is no longer a regional thing. I think ESG is very much a global factor for investing. So let's get to the answers and see what we see. Interesting, I think that I'm actually not totally surprised by this. You've got no one saying very important, everyone is saying important, somewhat important, and 30% is saying not important. And I think that if I was to, again, comment on those answers, what I'd really say is, that's probably reflective of the percentage of society overall that's interested in this versus those that are not. I mean, and I think that, probably if we'd asked this question 5 years ago, we would have got even, lower scores. But I suspect that the trend will be to see this increase. What do you think?
Yeah, I still think it underscores that there's a lack of consensus. It's a marketplace that everyone's very interested about, but when you start digging a little deeper, you quickly have advisors and their end clients sort of not sure exactly what's the first step and what's the right direction to take, and if we're investing, exactly how we're going to approach it. So I think there's still a bit of time, education, and understanding that needs to be put into this marketplace. So I think demand is there. I just don't know if firms know exactly where to execute and where to go on. But I think I think you're right. I think if we look back, the important probably is down lower, and I expect if we did this survey even a year from now, we would see important start to rise, and maybe the very important start to come into play. Especially the advisors and firms are really taking that impact investing and that social approach to not just looking at investments, but how they manage their practice and run their offices. So they're all looking across the board as a philosophy that cuts across an organization culturally, as well as from an investment standpoint.
Excellent. Well, people have been asking questions on the Q&A. I've answered a few of them. We've got about a minute left, but are there any other questions that people want to submit now, or we're nearly at time, but let's just see. And if not, maybe what we can do is wrap up, and we can then share the presentation and the recording afterwards as well. Let's just see if any more questions come in.
And we're also happy to respond to the follow-up questions via email as well. So certainly we can do that as well.
Exactly. So look, let's do this then. First and foremost, thank you everyone for attending. Thank you for joining the webinar and the webcast here. Certainly I hope you found it informative. I think there's clearly an area of focus now around engagement and how you utilize digital tools to get there. But thank you very much to Aite for joining as well and hosting this with me. Yeah, we look forward to engaging with any of you further to this if there's any interest in follow-up. So thank you very much.
Thanks, Christopher, for having us.
Yeah, thank you, Christopher. Everyone have a great week.